Good morning, everybody. Happy Tuesday. Welcome to PreMarket Prep. Spencer Israel. I got Dennis and Joel today. Yeah, I told you guys. I told you I was going to let him out of the basement, and I did, and he's here. So we got the full crew back together again. As far as today's show, we got to talk about Nike. We're going to talk about Alibaba increasing their buyback, and we're going to talk about Okta reporting a cybersecurity breach there overnight. That stock is trading down. We'll take questions from our chat, and we'll talk IPOs with Eric Krull, co-author of the Lifecycle trade at 8:35. So you know what to do, right? You're gonna hit the like button. You're gonna hit the like button, and I'm gonna play the intro while you hit the like button. Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Let's bring on Joel, fresh out of the basement. Joel, good morning.
Good morning. Good morning. Welcome. Welcome. I'm a little concerned. I'll tell you guys in 1 second here. S&P futures are up 11 and a quarter, 44.63.50. That's your last print. Crude up 18 cents at 110.17. Gold in the red by $1.15, 19.28. Silver in the red by about a nickel at 25.26. Bitcoin having a good day, going back up to that, a very important 45K. That's up 18.50 and at 43,000. Let's go up 43,100. And Ethereum futures, they're going the same way. They're up $105 at 3026.50. And the reason I'm concerned is that
Why?
Dennis is bullish.
I wouldn't say that. I was given the market thesis on what's happening. I don't know if I would say that I'm exactly bullish, but I'm it's hard to be bearish. I mean, you kind of got to go with the flow.
That's a good way to put it.
You kind of got to go with the flow to a certain extent. I'm still sitting. I did buy one stock yesterday in the long-term portfolio again. Bought it for I think the second day in a row I added to my AMD. It's now a full-size position. It was a half size to start, and I'm like, you know what? Setting it to a full size. I need just I'm too underweight risk. So need to get a little bit of risk assets on there. I still think there's a sleepy AMD. I don't mind this chart. It's still a downtrend, clear downtrend, but it's rounding, starting to look interesting. Valuation is not cheap, but it's not as nuts as some other things as well. So anyways, I added my AMD.
I think it looks peppy, especially if the market keeps going here.
That's what it is. If the market goes down and I lose on the AMD, at least short term, I'm fine with it because I'm way too much cash. So I was looking for stuff that hasn't really gone that far yet. Yes, it's up from the 100, but everything's up from the very bottom. So I was looking for something that really hasn't went up 50, 60, 70%. I'm not chasing stuff like that right now. So it's up. And if the markets go to new all-time highs, I think AMD is going to, be right along with it. So I'm just hedging myself to a certain extent against, all-time highs. But obviously, I'm still half cash, so I don't want to see all-time highs, at least not yet. So I think I'm going to get more dips to buy, rebuild a little bit. I do still think that, this market has now gone to full FOMO again. What it's going to take to shake that is going to be, to be determined here. But FOMO is back. There's no doubt. You can even watch from retail reactions on CNBC. They mention a stock and everybody's like, buy it. So it's back. The FOMO is back. Everybody thinks, we're going back to all-time highs, which it could. We've given the scenario where that is on the table. But there's also the scenario where we go back and retest the lows. So that's why I still sit with lots of cash, all the uncertainty.
I don't know about all-time highs. I think maybe we just finally develop a trade. Wow, I drew that rising wedge a while ago, and boom, it's time to get rid of that, man. I took out the top of that wedge. You know what I think was interesting about Monday's price action is you came off an expiration, right? And I saw what happened in shop, and the market was very strong. And I'm like, well, if this was an expiration fluff, right? And just all this, not, buying, forced buying, excessive buying, then I thought we'd give it back yesterday. And there was a point where we went red. We were red pretty good, right? Kind of opened flat and went red. But the fact that it came back, you're right at yesterday's high, very important. I'd be keeping, 44.73 yesterday, 42.72.5 today. Maybe I think it's important. It's important to get through there, keep going, or else you still might have a little bit of the expiration flush in there. What did Tim talk about that yesterday? Did he talk about?
Yeah,
a little bit.
He did. He did.
Yeah, I mean, the question is, and it was a weird day yesterday. We'll say that much. It was a day that actually didn't look that great until again the final 30 minutes, and the market keeps getting jacked in the final 30 minutes. So your 3:30 ramp guy on Twitter is fully at work here. I mean, bring up the SPY, Joel, and we were trading down, and boom,
Right
in
here.
the last 30 minutes, we literally rallied 25 handles. I mean,
Right
the
here.
day before obviously was the option expiration, but that was the same thing, rip roaring higher into the close. So I think it's like 3 days in a row where we have just ripped into the close, where the day hasn't looked that great, but then they rip them into the close, and it's like, what a great day. So it's a lot of chop intraday, chop and slop. There's still a great day traders market, as Mitch was saying. Fading moves, but there's some underlying themes here, which are somewhat concerning, because you definitely are seeing, at least yesterday, a little more of the value trade coming back into play. Commodities are starting to get hot again. And you just wonder if it doesn't equal a rollover in some of these growth stocks eventually, because they've had a pretty good move. But Baba's going to help them today. And maybe this is a good segue into Alibaba, because obviously, Alibaba was showing a little weakness yesterday. And I mean, they must be at Alibaba. They must be technicians too, because they could not time this increased buyback better on the chart than yesterday's, because Bob was just starting to show a little bit of weakness yesterday. And boom, we get a headline. And at 8 o'clock Eastern, right on the kisser. What was that headline, Mr. Israel?
Yeah, I come in and I see Alibaba trading higher, and I assume, China probably said something. Nope, it's Alibaba saying something. They're raising their buyback, their buyback program from $15 billion to $25 billion. So they're raising their buyback by $10 billion. Buying back more stock, reducing supply. It's a nice, easy trick to get your stock higher.
In normal markets, this would be up a couple bucks on this. But because this has got the short squeeze factor, this has got people who have hated this stock for so long and still saying, I'm just going to sell this, it's going to be, any positive news is going to hit it a lot harder. So, and meaning it hitting it in a good way. The stock trading up $9 here. I got lucky on this one, as much as I was unlucky to be long Boeing yesterday in my overnight portfolio.
Ooh.
I was long Alibaba in my overnight portfolio here, so which is good. I've already sold the stock. I got $8.50 off of it, so it's actually over $9 off it because it was trading down last night. So it was a good trade. So that gets back some of my Boeing losses from yesterday. Yeah, but it was tough. When you come in and you're long Boeing, you're like, it's going to be a rough day. But anyways, I on my day trading portfolio, I don't hold and wait for things to come back. We know I go flat every single day on that. So at 10 a.m. I'm out of everything, and that's when I go and I stop trading at 10 a.m. I've talked about that before, that I typically don't trade 10 to 2 unless it's like a Fed day or something happening. But it's just 2 intraday. 11 to 2 is really the really sloppy, choppy, no pattern, nothing really to do hours. Those are tough hours to trade. So I haven't traded those hours for years. So anyways, I went on a segue. We were starting with Alibaba.
Yeah, Alibaba is where we started here. So anyway, all of China is trading higher really this morning. I mean, Baba's your clear leader, but every Chinese stock is up.
This is kind of quiet up here. It had the big pop. It's above the high from Friday, which is important. If you want more today, maybe, that'd be a lot, 115. I see two highs right at that area, 1485 and 1540, but it's bid. I'd say hold this 112 bid and then push it up towards, you have to split those two highs at 1485 and 1540.
All right, let's move on.
And that's bringing up all the other China names too, just before you move on. Obviously, we're getting a rally here again. I mean, if you were stuck in China names, I'm going to say it again. If you've been stuck in these things and you were watching these things erode to the tune of 30%, a week ago, and now they're all getting it all, a lot of it back. In the case of JD, I mean, majority of it back. In the case of Baidu, the majority of the back. I think you ring the register and you move on. I just think there's a lot of uncertainty in all these names. Alibaba was always my favorite of them all, so maybe it's one it could hold, and maybe it's going to continue. I mean, there is the case for short squeezing here. There's the case to 120, just as much as when it was trading at 89 on the day, after those comments were said from the Chinese official. We said there's room to 100. It hit 100 that day. I think there's room to 120 on this thing, but it's hard to just come in here now and say, yeah, I'm going to come in Alibaba and these things are, these Chinese names are all going to go. This has been a really big move.
I just want to address Patrick Starr's comment in the chat about the 10-year. Everyone's going to be talking about a yield curve inversion today. You can already tell, but just by being on the online for the last couple hours, right? That's going to be the thing.
Exciting.
What's the saying that the yield inverted yield curve has predicted 20 out of the last 10 recessions? Something like that.
I like that. 20 out of the last 10.
Yeah, it's a big stat like that.
Yeah. So, people are going to be talking about it. I don't know.
They were all talking about the death cross on Monday, a week ago, and this is how crappy some of these indicators are. A week ago, they were all talking on the Monday morning, the absolute bottom of the market. They were all talking about the death cross. It was on CNBC. It was all through my Twitter feed. And it's like, this is really bad for stocks. And we have been straight up 7% on the S&P since that moment that we talked about the death cross.
Death cross was the bottom, Dennis.
It was the absolute bottom.
Dennis. It was a buy the rumor. They were going into the death cross.
Oh, it didn't actually cross?
The news.
Did it not actually cross?
It did.
I have no idea if it crossed. I don't use moving averages.
But us technicians, we were watching it going into the death cross, not when it actually crossed. That's when the media brings it up.
And that was the bottom. When the media starts bringing it up and saying doom and gloom and death cross starts coming on, that's your time to buy.
There you go.
Yeah. Fade the major media. Maybe we're major media, so maybe you should fade us too.
we are the most major. We are the major. Anyway,
we're the most important.
The 2-year and the 10-year haven't actually inverted yet. But they're about to, so that's going to be a thing.
I could care less if it inverts. I could care less about death crosses or hot cross buns or anything like that. I'm very simplistic with my technicals. Joel's very simplistic with his technicals. Do you have any moving averages on your charts, Joel?
No, they're a day late. They're
day late.
The 200's 200 days late.
Oh yeah, and technicians will just bash us across the face, talking like this, but I don't know. We've been pretty profitable our whole trading career is not using them, so sticking with it. Don't need them.
Okay, let's move on to Nike. Give Nike credit here. Nike had every reason. They had every excuse in the book that they could have used to justify a bad quarter, right? But their EPS beat 87 cents versus 71 cents. Their sales also beat 10.9 billion versus 10.62 billion. They did say, this is interesting, that their delivery times to North America are still more than 6 weeks longer than they were pre-COVID. That's not helped by what's happening over in Russia and Ukraine. Higher freight costs and shipping costs are weighing on their business, but it was a good quarter. Their e-commerce revenue, their digital sales is continuing to grow. They're continuing to pivot from or they are continuing to take away or I guess pivot from Foot Locker and the wholesale distributors to their own channels, and it's working for them. So Nike's up. It was a good report.
I mean, this is a stock that is loved by this is loved by retail. It's loved by a lot of people. It's well followed, and it's a kind of stock that when you're thinking, okay, well, I want to buy something, they're looking at something like this. So as much as if this would have reported 2 weeks ago, maybe it's not up $7. But right now we're in the FOMO. Oh, I don't want to miss the bottom. I've missed the bottom. I got to get my money back in there. I got too much cash. I've got like Literally, I had, I think, 7 people yesterday message me via, social media applications saying, I've got all this cash. What do I do? What are you doing, Dennis? Are you getting your cash back in there? I've got too much cash. There's so much FOMO, man. It's out there. So, I mean, this is driving price right now. FOMO is the driver. It's nothing else. It's FOMO. People really think that we're going back to new all-time highs, and we might. But that's what's the driver right now. So it's a completely different animal. That's why dips, are probably to be bought. I didn't look at FedEx dip got bought yet, but yeah, it's starting to get bought. We talked about that one 2 days ago. At 216,
Friday,
it's
yeah.
222. I mean, I'm not buying rips, but right now they're just buying anything. So they're into buying, especially Berkshire Hathaway.
You gotta knock out that seller at 139. They were there. We had to dip to 129. I don't know who hit it on that that hit it down, but just several times after hours, 139, 139, 139, 139, and then the 4 a.m. seller said, I'm going to step ahead of that 139 seller. So you're $1.80 away. I look at that first time target. If you don't take that out soon, get above that 139 a little bit from back and fill. You got a long ways to go to get to the top of yesterday's range at 32.31. If and I'm a little skeptical of getting through that 139. If you can get to that, 141, pair of highs right at that area. I don't know if there's any paper at 140.
That looks big, that 140 to me.
Yeah, it does.
I think if I was long it, I'd bring the register around 140, but I'm going to ring the register kind of guy. So it's been a ring the register kind of year.
It's a big move. It's
a big move. It's 120 to 140. I mean, maybe it keeps going, but this has been a ring the register type of market. So I'd probably ring the register.
Yeah, I mean, if you're the all-time high kind of guy and think this market just is going to catch a really wicked bid, then maybe you could hold out from 149, 150. That'd be halfway back of the move, but that'd be a little bit too much too fast. And Nike usually on these big up days, I mean, it still probably end up $4, $5, $6, but it will move on you. So make sure if you're long it, make sure at the end of that first 15-minute bracket, you're over 139.
Dennis, the challenge for you now is you can ring the register, but can you open your wallet? Can you open your wallet
to rebuy these stocks?
To rebuy.
No, I know that is the challenge. Well, I did a little bit with AMD yesterday, but yeah, I'm not buying. I've been selling European ETFs because I had too many of them.
Okay.
On the rally. I've been selling a little bit of emerging markets ETFs, and then I'm redeploying a little bit over here. So I'm just kind of reallocating a little bit of reallocation, but most of it's just been sitting. It kind of sold emerging markets and sold European ETFs and just kind of went to cash, and not too much is reallocating to stocks over here yet. Next step, I'll be reallocating.
All right.
Maybe we'll never get it though, and I'll be left in the dust. I'll be okay.
Should add that Under Armour is trading higher a little bit this
right
morning. Off that. Skechers, SKX,
Foot Locker is up as well.
Foot Locker is interesting though, because part of the bullish thesis of Nike here is that they are pivoting away from relying on their wholesale distributors and more so on their own. They're going direct to consumer, their own platform, their own website. That would theoretically hurt Foot Locker. I mean, Foot Locker has been hurt. You can see it in the chart. It's gone from
I got crushed.
Gone from 66 to 30, right? So it's not like the market hasn't noticed, but I'm a little bit surprised to see Foot Locker trading up this morning.
Well, is it Sarah Eisen on CNBC? Yeah. She commented on this on Fast Money. They bumped her, eh? Like she always was there with Wealth, and now she's on Fast Money. Or just comes in and comments. You know, she was always Wealth on the last hour.
They have a new show. They have a new show now. So
yeah, I know she got bumped. That's too bad. But she commented that there was comments from the conference call on this, going direct to consumer, and she kind of said, and she really gave Foot Locker a lift. If you see that big lift, that bar goal,
I did.
That wasn't Sarah Eisen said. That they'd commented, and I'm going to butcher it because I don't know, I can't exactly remember what she said, but she said that they were it looked like that they were getting to, that they've kind of done what they were going to do. So she said, which might be good for Foot Locker. That was her summation. So that's why Foot Locker went from like 31.20 to like 32.60 when she said that.
Wow.
So yeah, and then it came right back in. So I don't know if they're done. I didn't listen to the conference call, so I'm just parsing her words from it. But she kind of, was saying that they went direct to consumer, and obviously that's where they're focusing. But their efforts there, what she was saying is they've kind of have done what they're going to do, at least for the short term. So she said that might be good for Foot Locker. She actually said that.
What a great number Sarah took it to. Look at that.
That's the Sarah Eisen pop right there.
Look at this. And I'm proud of my technicians out there because 3 highs at the high of the rebound. Look at that. 32.41, 32.58, and 32.66. And they took it right there. So if in fact you can clear that, I don't know where you go if you're short. You got the big gap from earnings. It's not going to immediately fill that, but great area. So if it gets back up there again, 5,800 shares is traded. That's not a ton, but there you go. A little breakout, and then it looks like Skechers can run 2 here off this news. Look at that. Look at this $40 area. It's been testing that for a long time, right? I don't know why, if that dropped off the Foot Locker earnings or what, but there you go. The 40. I mean, if you don't feel like chasing Nike up $8-9 or whatever, look at the Foot Locker. It looks like it's a little bit of a breakout over 40. We'll see. I don't know if there's any paper. It's flat at 39.73. So if there is any paper at 40, it's getting a running start at it.
It's an interesting day for all of these. So we'll say, obviously off the Nike earnings, you want to see them lift, you want to see them hold. They start to roll over and go red. Look out below.
Exactly. Good cat. And Crocs, how's Crocs doing?
Too many holes in the story for me, Joel.
Yeah,
I just said that in the chat.
Look at Crocs though. I don't know. Look at all these footwear ones. Look at this. Look the same. Look at that. 84.74. If you can get a little breakout there in Crocs. So we'll see. They're all setting up pretty similar.
All right. The first thing I saw this morning when I woke up was Okta. There apparently were some screenshots going around the internet that showed hackers had breached some sort of Okta platform, and the company said they are investigating said breach. So OKTA trading down, and a lot of companies. This is like an infrastructure play too. So there are a lot of potential ramifications for this if other companies had their systems compromised through Okta, because Okta does like authentication, right? So OKTA shares trading down because they had appear to have had a data breach based on screenshots.
Oh, the irony! The cybersecurity stock gets breached.
Yep.
I mean, there's FOMO running here. The trend is awful. There's an awful channel here that it definitely didn't get above, but we're in full FOMO mode. Okta is one of those FOMO stocks. So on this dip, if this isn't a big deal, obviously we're going to find out more about it as we get more information. But would not surprise me if they come in and buy the dip, and apparently they already have, Joel.
Yeah, I mean, such a reliable source. A screenshot on Twitter.
They literally they hit it down. They hit it down to the lows. They hit it down to the 52-week low on this.
They did. They did. Look at that. 3 lows in a row. 44.28, 43.30, 45.88. They knocked it down just under 145. So the Bulls were there to defend, up 12 points. I'm going to give, I'm going to throw out the screenshot. I'm just going to throw my my FedEx trick at you, this one, and I talked about this one on Friday. Forget the news, forget everything. You had 43 to 75. That's basically like a 30-point move, right? Or 32, so 16. That brings you 158, 159 right in this area here. You are trading below it, but if this is a buy the dip opportunity, I expect the Bulls to step in right in this area, hold the bid for the day, and maybe take a shot at the double top that you had right around 175. And the reason I said FedEx is we did discuss that it was the pre-market prep stock of the day on Friday, right? Boom. They hit it. They didn't like the report. It had a nice move from 200 to 230. It came nestled back into the 215 area. settled there, and then Mr. Market helped it out yesterday. So same setup. That's I'd be looking if you're interested in buying OKTA.
So I would also expect, even though Okta is trading down, I would expect Cybernames to be trading up today. So Palo Alto,
because there was a cybersecurity
Fortinet,
breach.
yeah, CrowdStrike,
I get it.
Zscaler, SentinelOne.
Yeah, they're up slightly.
Yeah, CIBR is your ETF that I've got.
I got that too.
Oh, nice.
I did that a while ago. I did a while ago.
Sweet.
Oh, nice.
Yeah, I don't know.
Where'd you buy this?
I don't know. Probably like when it made this spike, and no, I can't remember.
That's
It
the
was like,
all-time high.
yeah, I made the journal on that one.
No, I was just okay. We all make the journal, and what he means by that is we buy the high or sell the low. All right, we got 8 minutes here.
What else we got to cover?
I thought about going on a rant there, but I didn't. I was going to go on a rant. I held myself back on the news algo because the news algo is stupid.
Do you want to talk? Oh, Joel, you weren't here for the Shopify discussion yesterday. You missed all that excitement.
Oh, I didn't miss it. All I need to do is look at my Twitter on my phone, and I
was there. We better not talk about it. They said we talked too long about it yesterday. They were all mad at us. So.
No,
but you know what's cool? You know what's cool is and what I find hilarious actually. Let me just go to my ARC email here. Kathy Wood. She doesn't really do much anymore, but she's like, Shopify down $100. She's like, yeah, I gotta buy some Shopify when it's down $100. I wonder if she didn't realize that it gapped up $80 on the close and it wasn't really down $100. I seriously wonder that if she didn't realize this, she just sees it's down $100 and she backs with a truck. She bought 32,000 shares yesterday, and we know she loves buying the dip, but it wasn't really a dip yesterday because it was never really up there. It was never really, I guess it was, a dip from where it was, but it kind of is where it was at like 330. And then you had the ridiculous close up to 780, which we know just screwed anybody who calls and exercise them.
Did you help anybody out on that, Dennis?
I don't know. Nobody reached out.
Because you were trying.
I was trying to say, lapse those. Do not exercise those calls. Please don't exercise those 725s and 750s and 775s. But
and I'm like,
I don't know.
I hope people understand what he's talking about because
they probably didn't.
And
I don't understand what I'm talking about half the time.
No, that I saw it. Well, actually, you texted me too. As we were landing, I'm like, whoa! And then I saw the tweets, and I was thinking, man, people got screwed on that. I mean,
it would have screwed a few people.
Well, and also, what about the people like that had the puts? All those puts going into the close.
It screwed everyone.
And you're like, oh, that deep in the money, but. S&Ps are eerily quiet here. They won't go up and really won't go down. It's still up 9 handles, hanging up at the 44.60 handle. We got the double close at 53 and a half, the 53 area, so that's good. Got a little bit of below it during the pre-market, but market's trying to hold the bid up here near the highs of the recent rebound.
Yeah, it's trying.
Trying.
Robinhood just got a little bit of a spike just now because they announced, or Reuters announced that Robinhood is introducing a cash card, which had been rumored for a while. Just a little bit of a spike just now.
I could get talked into Robinhood. I could get talked into the stock. And the reason is not valuation. The reason is just, I think at a certain price, and I've said this before, at a certain price, there's so many customers that it actually is an acquisition target. So I could get talked to. I don't have any position in it, but you got a triple bottom there at 10. That's a pretty hard bottom.
Yeah,
I'd love it at like 12. It's 13. It's like you're 30% off that low in like 4 days. But man, genius buyer who was buying on the Monday low when the death cross was happening in the overall market at $10.20. Because wow, 3 days, 30%. It's hard not to take a 30% gainer in 3 days, but I can see a scenario where this thing could be $15 or $20 again. I can see that scenario. So I think I'd be a buyer of pullbacks on Robinhood.
Nice little pop up 20 cents if you're looking shorter term and you don't think you're going to get to the 12. Actually, what was yesterday's low? 1250. Couple lows. I think buyers stepped up to the 1250 area. I don't have a perfect number at 14 for you, but the high from last week was 1395. Another high at 1406, another high just above that. So 14, got to get 14 bid here and make a run at 15. That's still another 75 cents away. But if you can get it in the 12 handle, you're leaning on a pair of lows at 12.50. So I don't know, but the way the market's acted doesn't seem like it's going to give you that 12 at least yet today.
Greg Stanford sold a Robinhood at $79. That's the way to do it, Greg. When the FOMOs run completely rampant and the stock doubles in 2 days, that's when you sell.
And that's a great thing too, like to think about in hindsight, because maybe Greg in the moment was like, "Oh, I could have held to 85," but what's the difference? What's the difference between 79 and 85? Right?
Yeah.
When the stock is at 13, what's the difference between $6 extra? Who cares?
Yeah. Just get out. When you see your stock go parabolic because they're talking about it all over social media and on Reddit, you sell. Good job, Greg.
Good job, Greg.
And then when did that must have been before the insider came in and just squashed it. Remember,
they were trying to sell as fast as anybody who could sell that stock would have been selling as fast as they could. It went from 37 to 85. It was like limit up, limit up, limit up. When your stocks start going limit up, you sell. You get out because this is just getting silly town here. The silliness of one lack of people willing to short the things that are going parabolic, but those parabolic moves are beautiful when you're long, and don't let them get away from you. Get the hell out. That's my opinion.
As far as other earnings, there really wasn't that much. We had 10-cent music last night, which is small. We had Golden Nugget. This morning we do have Carnival. They're not out yet. They're typically out after our show is over, because they're
it's like 9:00
European. Yeah, they're always out like at 9:15. So that's not actually, but they will report before the open here. Tonight is Adobe. That's the big one.
It's a very late earnings week. We got Adobe basically tonight, and we got KB Homes tomorrow with Winnebago. I think RH got bumped, and that's why it's not on my thing. I know you said RH is Wednesday. RH got bumped the next week. They bumped it. They moved it. Yeah, they pulled the rug out from under you on that one, Spencer, because I was like, it's not on my list. And then I went and researched it, like they moved it. So you were right. It was originally scheduled for this week, but they bumped it back. NEO's on Thursday. And let's talk NEO here and XPEV. We can do them both together. Obviously, these are two Chinese names that have rebounded dramatically with all the other Chinese stocks. Thoughts, concerns here? NEO got down, Joel, to $13. Where was this at the highs?
$65.
$6 to 19. Oh, 25. I think I'd be two-hand seller at 25, but that's still $4 away. But two hands sold. 25.
Man, same thing here. I mean, you break it through a pair of highs here. Right at 21. No, you're not. You're not through there yet. So, if the boys can get this going, you had a little bit of a weak close above 21.20. A little bit of a shorter term trade. I don't know if I'd look for 25 today, but same setup there. Two highs, the same area, not quite an inside day. So. A lot of like double tops and after Friday's actions.
And Friday's numbers are very important for so many stocks because you often see short-term tops put in on those option expirations or turns in the market. You often see this, and a lot of stocks did not even get close to where they closed or where they were trading out on Friday. So until some of these growthy names get up there and take out those Friday highs, I'd be concerned about chasing here. I mean, even ARKK double topped it yesterday, Joel. 65.97, and then it gets the dip off the bat, and they start buying after the open because the FOMO's kicked in. It's like, gotta buy dip, and it gets up there, but doesn't make a new high
all the time.
Doesn't make a new high, and that's concerning. You want them to continue to make new highs. Stocks and uptrends need to make new highs. We don't like to see the double top because then the technicians like us look back and say, oh, two tops, same area. Maybe it's going to turn. I mean, ARKK is it is like the double top and double bottom master.
It is. Look at we've been saying that for a while.
It really is. Like if you go back two highs in a row, back to the 28th of February and the 1st. And then it turned down and went down like 20%. Look at when I put the bottom in 52.06 March 14th. Next day 51.85 within 20 cents. Crazy, ETF really volatile. I'll call that a little double bottom. But just put the double top in. So you can see it likes to do that. So right now we have a pattern that is, for those 2 days, which would be bearish. Now, if it takes it out, all bets are off, and then you could say now you're maybe going to move to that 72 area. But I don't think you can get long ARKK until it breaches that 66 now.
All right, let's bring on today's guest, Eric Krull, longtime friend of the show, co-author of the Lifecycle Trade Manager at Krull Asset Management. He always gives us some really good data on how recent IPOs are performing. So let's get Eric on the show right now. Eric, there you are. Good morning.
Hey, good morning. Can you hear me?
We can hear you. How are we doing?
Oh, I'm doing great. How about you guys?
We're doing better than a lot of IPOs, I suspect.
This has been an incredible year for IPOs, 2021. And we had a record number of IPOs. And if you include the SPACs, it was just off the charts in terms of the number of IPOs that raised cash and SPACs. Huge. But then when you look at their actual performance, it also was very poor, as you're showing there in that first slide. Normally, we found in our data from 1982 to 2017, about 55% undercut their day one low within 3 weeks, and it was up to almost two-thirds of them this time, 67%. And look at that, at 39 weeks or 3/4 of trading,
oh my God,
96% had undercut their day one low.
Remember when you got 96% on a test in school and you're like, I didn't get nothing wrong. I'm like a genius. I mean, this is like, it's like a given that they're going to undercut their day one low, and obviously it's been like a given.
Yep, pretty much. I mean,
wow.
we all knew how bad it was, right? The data shows it was even worse than we thought.
96%. I would never thought that number was that high. So what do we do, Eric? I mean, do we just avoid all these new IPOs at all costs here right now, or has the market turned now in the last few days?
Well, as we always say, you want to be patient and make sure that you don't just get so excited at the beginning that you buy right away. You don't need to. Like 96% of the time,
That's
last year,
crazy.
you would have got a better price.
Yeah.
And not only that, if you look at liquidity, which I have in the next slide,
yeah.
Most of the time you expect about 28% of stocks to be liquid enough for institutional investors to trade. But the IPOs from last year did worse than that. Only 14%, or 1 out of 7, are liquid enough for institutions to be interested in it. And we only want to invest in stocks that institutions are interested in because we don't want to move the price ourselves, but we also know they're the ones who drive long-term price growth as they acquire millions of shares, right?
That's true even as a trader. I mean, Joel and I talk about that all the time too. It's such a great point you just made there. I mean, institutions, you can talk about, high frequency traders and algorithmic traders and all that other stuff, but they're not sustained. That's noise in the market.
Exactly.
The sustained drivers, to your point, are institutions, big money coming in. They sometimes take days to get in these mid-cap stocks, obviously, and then they pick on the mega caps because they can get in and out of them more easily. But I mean, they're the real driver of price here. And, you get on the right side of where the institutions are trading, you can still make some money.
Right. And you would never get into a stock that trades less than $20 million of volume a day. It would just be, small institutions might, but not the big ones.
Eric, how do you measure liquidity? Is it just daily volume, or is it dollar volume?
It's dollar volume. I take daily shares traded on average times the closing price, and that's how much daily dollar volume it's done.
What to you is like the barometer, or where do you draw the line?
I draw the $20 million a day is a minimum, and I know people like my friends Kathy and Eve, co-authors, and my friend Kurt, who's also co-author. They would maybe set it even higher sometimes.
Okay. This is always my favorite. This guy right here. I don't know why the table looks different there, but the best performing IPOs.
Shipping
IPOs that IPO'd last year, and
right.
Of course, it's the shipping stock.
Well,
this is a simple game, man.
Hold on a second, though.
Okay.
Hold on a second. ZIM, they paid out their special dividend today. So, and it was a ridiculous dividend. It was like $17 a share.
They're making so much money.
Something crazy like that.
Holy.
So
I didn't know that. That's interesting.
Yeah.
They're just raking it in. They're raking it in.
But there's two things I want you to pay attention to on this one.
Yes.
First is the line at the bottom. There's no other IPOs from last year as of March 5th that had a gain from their closing price on day one. So you're looking at only 10.
There's only 11 of them.
And
how many IPOs were last year?
Counting SPACs, there was over 800. IPOs were like 450. It's amazing.
Wow, tough game to buy on that first day. Tough game. That's what I just learned today. Don't buy the IPOs on day one.
Exactly. And number two, that Apria, they were acquired. So if you look at their stock now, it's going flat. That was part of the reason they got 60% was someone overpaid for them, or paid really premium, I should say.
Or it'd be a loser too, maybe.
Yeah, but
wow.
That's the list. We're 10 stocks that IPO'd last year that are above their day one close.
That's pretty remarkable. And again, if we had this conversation a year ago, and we did have this conversation a year ago, the table was much longer than that.
Much bigger. Yeah.
Crazy.
So I guess what's the takeaway here is just don't buy IPOs right now.
Yeah. Well, first, the pipeline for IPOs is dried up. Companies do not go public when we're in a bear market or in a terrible market. So there hasn't been too many. But the ones that do come out, again, it's the patience. Just wait. You don't have to buy right away. Wait for some sort of base to form, some consolidation, and then a breakout above that base in heavy volume. And that's always been kind of the way we look at it.
Only 11% of the IPOs of last year are trading above their day one close as of a couple of weeks ago.
Right.
And it's not even about they breach, they just don't get it back.
11% are trading above their day one close.
And some of them didn't make that last list because they're not liquid enough. So that last list showed only the liquid ones. This one shows them all.
Yikes.
Yeah.
Wow.
And look at that. You have 42% are down, 50% or more from day one closing price. So if you bought an IPO on day one close, about 40% chance you're going to lose 50% on any of them last year.
I don't think you're making any friends with the investment bankers here, Eric.
Well, hold on though. I mean, IPO performance is not indicative of the investment bankers.
You don't think?
No, because they don't care.
I know, but I'm saying they're trying to sell you this stuff.
Oh, okay, yeah.
So they're trying to sell you this stuff, and it's telling, and Eric's saying, don't buy it.
Right. Yeah. At least be patient and wait. Right.
These investment bankers, they don't like you right now.
Yeah, and then if you look at where their peak prices, because a lot of times IPO stocks last year made some good gains. About half of them are 50% off their peak price. So it's been and 28%, or at least a quarter of them, or a little slightly more, are down 3/4 from their peak price. So it's been a tough game.
Let's drill down on a couple individual ones here, and I don't know if Rivian's been out long enough for you to talk about the different phases in RIVN, and then also just like to hear your thoughts. Robinhood's been out for a while now.
Yeah, you know what? Why don't we go to the next slide?
Okay.
And, it has Robinhood, and then maybe after that we can pull up a chart. I put one of your guys' favorites, Rocket Mortgage, there.
Oh yeah.
It had a couple bounces, the first IPO advance, and then it went into a due diligence phase, and then it had that crazy day, I think, that it rocketed up to make a pun, went up to 40, and then just look at that decay after that. I'd say right now it's in a due diligence phase, and we'll see what happens. There's Robinhood next. They had a lot of excitement for 1 day or two, and then look at it. It's come way down below 20, and it's in some sort of due diligence phase. And then the others, Oatly and Toast. My friend Kathy Donnelly, she pointed Toast out to me, and she's good at pointing out stocks. So I was watching it, and I actually took a small position, that little gain there, and then gave it back quickly and just got rid of it. But you can just see how IPOs last year, they all seem to have this pattern of slow decay. And obviously, these were ones you would have to sell following your sell rules if you did any kind of investment. And now you just wait.
And when you look at those charts and everybody's talking about the big bounce that we've had, I mean, when you put it in perspective here, everybody's like, what a bounce. I can't believe, you're in cash here right now. And I look at this and I was like, this is why I'm in cash.
Yeah, those are weekly charts.
I don't even see the bounce on these charts. Right. It's so small, you don't even see it.
And those are updates from yesterday. So
some of these are up 30% from the lows. Like Robinhood's up 30% from the lows, but you can't even see it on that chart. Yeah. So the guy the person who Greg sold to at $79 doesn't really care that Robinhood went from 10 to 13. He's still long at 79. And it's not even putting a dent in it. These things are ugly.
Yeah.
So what are you watching? Someone in the chat asked if you could opine on GFS. Well, that's right here on this next slide here.
Here we go.
This looks like one that you are watching.
These are ones I'm watching right now. My friends Eve and Kathy. Eve is really good at spotting stocks that might be setting up. And she pointed out GFS to me, and also Brothers, which is on the far right. But GFS, Global Foundries, it's a chip stock. And you can see it had a start around the $45 to $50 share in the first week. And then it bumped up and made a nice gain, corrected during the terrible end of this bear market here. I hope it's the end, but the most recent weeks. And then it just, even before the market started to rise, GFS did, and it's broken out. And that's the kind of a place where we look for. We look to see it bouncing above the old high, get through that turbulent zone, and then you can buy. So GFS is doing well.
Yeah.
EDR, it's another company that's forming a nice pattern. It formed a little small advance for a couple weeks, nice correction, undercut its IPO low. So it fits in that 96% of all of them last year. And then it formed a gain and it broke to a new high. And then when the market correction really got bad a few weeks ago, it came back down. So I'm watching it to see if it can break out above the old high. And then Dutch Brothers, the coffee place.
Hey, we know that one.
And that, yep, we've been watching that. And thanks to Eve, it's on my radar. I'm watching it closely. And really, in the last few days, it looks like it's setting up to maybe break above that high that was set maybe 6 to 8 weeks ago. And that would, to me, would be a place to buy. But we like to see breakouts above the old highs and heavy volume as a sign that maybe you can start investing in it after this due diligence phase where it goes sideways for 3 to 6 to 9 months.
I do want to add that Eric's colleague, who he's mentioned a few times, Eve Bobach, his co-author, will be at the FinTwit conference in Vegas, May 13th and 14th. Check out the link that I'm going to post in the chat right now to learn more about that. There's also a discount code. I'll put that up on the screen as well. Eric and Krull, any final thoughts for us here today on IPOs, on trading IPOs, on buying or selling or waiting or anything?
Here's the thing we can't forget. The best time to buy stocks is after a bear market, and the NASDAQ has had a bear. You don't want to be early. You want to wait to see confirmation of this uptrend. But the new bull markets always have new leaders. Many of them come from the IPO space. And so you get excited when you see a correction. Hopefully you haven't been in it and gotten hurt too badly, because just around the corner is going to be another opportunity. I'm hoping it'll be some of the recent IPOs, and maybe even one of those three that I showed there is one I'm watching.
Do you think the low is in? A lot of people think the low is in. I'm on the fence.
Yeah.
I kind of think it might be, but we're going back to, obviously, even on the S&P, we never did breach the low from back in February, which was February the 24th. You think the low is in?
I think it depends on the world events in Ukraine and Russia, right? I mean, if it somehow escalates into a NATO country, or they use some sort of chemical or biological or nuclear weapon, then the low is not in. I'd like to think it is, but I think the market's pricing in that things don't escalate. And so if it escalates, I don't think the low is in. Otherwise, I do. There has been so much damage in growth stocks, and other indicators were off the charts negative, that it indicates that the potential low was in. But I think it depends on Ukraine and Russia, unfortunately.
Eric, it is always a pleasure to have you on. Whenever we have you on, we always see people in the chat saying, "Get Eric on more, get Eric on more." We got to let the stocks develop, though, and then we can get on. But Eric Krull, always a pleasure. Have a great rest of your day. Thanks a lot.
Thank you. It's great to be here. Thanks for having me.
Thanks, Eric. Always well prepared.
And I just another note on that ZIM, right? ZIM. It is not. Okay, the price is trading lower today, but the stock itself is not down, because they paid out this crazy.
It's actually trading up.
It's up $4.
There we go. They paid out this $17 per share dividend today. So
nice dividend. You can tell they're really bringing in a lot of money when they're giving out $17 special dividends. I mean, this IPO'd at like $10, and they're like, I just paid out a $17 dividend. There may be no better IPO in the last 5 years than this puppy right here. I mean, we went into shipping crisis, and this is right there making the money because of that, correct? Like, this is shipping solutions.
Yeah.
These are the people that are making extra money off of our supply chain issues, everything.
Remarkable.
Yeah. I mean, and it's up here again. So yeah, it's not 88. It's not a dip. Kathy, it's not dipping here today. 71.
You mean, man.
So
You
you got to look at
mean.
the fine print, Kathy.
You mean.
75. So
All right.
it's up $4 here. 71.01 is the adjusted close.
All right, one stock that is trading down, Upstart, that caught a downgrade to underperform from Wedbush this morning. Down from neutral to underperform. Price target lowered from 110 to $75.
Wow, they hate it.
Yeah.
Holy, I don't know what to say.
That's a tough one.
It's a tough one. I had a good earnings, and obviously it's given that back. And then I'll try to make a new low, but didn't make a new low on the move. Put in the tidy little double bottom that we talk about here. Now you're getting a pullback here. You probably find buyers on a pullback. Let's do a 50% retracement of the most recent move just for fun. So 85 to 133. Oh, Joel, I'm going to throw you this, Matt. It's about $50. Take off 25 from 133. 110? Yeah, you know what? You're $7 away. I think you get down to 108, 110 area. I think you find buyers in this. If the bottom is in.
Right now, there's someone wants out, maybe caught long overnight, pressing it down. Are you through yesterday's? You're through yesterday's low by a wide, pretty good margin. So use 122.75 now as resistance. Your next daily low has not been hit yet. Friday's low 13.91, and then after that, it really opens up. So this is a downgrade. Right? Correct?
Yeah, to sell.
Yeah. By who?
Wedbush.
It's your guy,
Wedbush.
man.
Okay, Wedbush. Okay.
Joel's buddies.
They okay. Well, that reminds me, we have to get Mr. Clean on again. We haven't heard from him in a while. But I don't know. Weird looking chart. The monthlies tell you all you need to know, and what the monthlies are telling you is like just until you can clear this 158, 159, this thing ain't going nowhere.
All right, let's do some ticker time. Drop your tickers in the chat. I keep seeing people mention StoneCo, and I have no idea why.
Yesterday I had the big move.
STNE, right? It's flat today.
Or 2 days ago. Had the earnings, gapped up on
It did.
Earnings. 15. If you're looking for a level on StoneCo and you're long this thing, I'd be a seller at 15.
You're not going to get it.
You don't think you're going to get there?
No. I look at the close.
1441. Almost got there yesterday.
Yeah, but I mean, right now, buyers got to step up right now on the open because you had that big volume day on Friday. Oh, I gotta own it. So everyone owned it, and then you found some people to sell it to early in the session on Monday when you went to 1441. But now when all the lemons were squeezed, there were no buyers. Good. I don't like it under this 1327. Maybe you don't go back to 1209, but very important to hold that that nickel gain that they have and turn higher. Yeah, people coming down from that 1441 today.
Let's talk about Tesla. They're going to open their Gigafactory in Berlin today. Elon Musk is going to be there and cut the ribbon himself, which must mean it's a big deal. Tesla's been strong.
It has, and it just does not pull back. But I mean, it moves with the S&P now too. Bring up the SPY chart, bring up Tesla chart. We're all Arbit. I trade Tesla every night with the S&P. I mean, I'm not even like it's not touched my long-term portfolio, but it's a total ARB trade now. All the ARBs traded, such a big chunk of the S&P. It's an S&P stock. So what the S&P does, Tesla does. It obviously has its own news as well, which can be a driver, and it's a leader coming back, but. Tidy little double bottom again. I mean, this Joel Elconin technical analysis, 756.04, the low on the 14th, 756.57. As soon as it doesn't make the new low, that's the turning point. And that was the turning point in so many stocks. So now you wait, but you are coming into a level. You have a whole bunch of sneaky tops. Yeah, in the 50s, 950 or 942. So you got some resistance. It's not as easy sledding as it's been the last 5 days.
Yeah, I see some room up here to 950. A couple highs in that area, and actually going back to the end of January, it hasn't been over 950. And what are the monthlies telling you here? The monthlies are pretty close to each other too, right? 930 or 947.77 and 942.85. So there you go. That's your big level for Tesla. Nice 1, 2, 3, 4, 5 day run here. So let's see. Always when you get these kind of runs, you want to see it hold the highest low of the move, and doesn't look like we're close to that. That comes in at 907.09.
You want to jump to the top of the queue? You drop the $5.
Yeah, I was gonna say
you jump to the top of the queue.
Francisco just dropped us a $5 to talk about Oxy. We can do that. I don't know if you saw Oxy yesterday, Joel, but right off the open, man, it just ripped.
Man. Warren's added to it. You had the nice dip. Yeah, he added to it again last week. You had the nice dip there for 3-4 days. That was the buying opportunity. Got down to 52, and now you've rip roared and rally here again. It's off to the races. I mean, the trend is your friend here if you're long. Oil prices don't seem to be coming down anytime soon. Buy or pullbacks.
What Warren's doing with this piece is he's targeting $68. I mean,
I love it when Joel gets in Warren's head.
Yeah. He sees all these going back to 19. He's monthly highs 67.46, 831, 798, 883. That's 4 monthly highs in a row, trading up a dime. And look at I don't know, not much to say in this one. 62.40 new high. It's interesting because crude has not made a new high of the move yet. But Warren has pushed it. That was a new high of the move. Yesterday it's 62.40. So even with crude up, you got some work to do. I'll give you 62.40, pretty good number today.
Okay, we can talk about CLF for Golden Brown because he keeps asking. How is Cleveland Cliffs doing? I imagine it's up, but I haven't looked at it.
Oh, steel is just monstrous moves. I mean,
this is an incredible. Well, I guess it's up again.
This is an incredible move. $18 back on February 24th. We are 1 month later, not even quite 1 month later, and the stock is up 10 on 18, 60%. Hard to buy now. I mean, it's went so far. U.S. Steel, the earnings dip, immediately bought again. They can't get enough of commodities. New core, new all-time highs yesterday. I'm still on my new core. I mean, this is just the market of commodity driven. And that's what concerns me the most about this rally in the S&Ps here, is that it's still commodities leading the way. And we know commodities leading the way earlier, and eventually we rolled over there. So you need some other leaders to take charge here. Commodities are still leading the way. It's a commodity driven market right
now. The cliff, right? Is that what the one that people originally wanted?
Yep.
Trading up 26 cents. I mean, you haven't been up here
multi-year
forever.
High.
Yeah.
Like I'm going back 8 years. Like where?
Let me see if I can. Yeah. 2013. Where are we at?
Bottom chart.
I mean, the next monthly target would be 38.48. That's just based on the monthlies, but I'm sure if you drill down on the weeklies or something more shorter term, you can find something. It's a big move, and I would big upstream. How many up days in a row here is it? Stocks 1, 2, 3, 4.
2 red candles in the last month.
Yeah,
we basically had 2 red candles in the last 3 or 4 weeks. The stock's been an incredible mover.
Yeah, it's been a monster.
All
right, it's 9:00 though, so we got to hop. There are more tickers, I am sure. I know I see them in the chat. So Joel's going to go over to PreMarket Prep. .com for PreMarket Prep Plus. We're gonna go over to live trading.
Yeah, I gotta get my tickers on. So, all right, everyone, have a good day, and just keep an eye on that high from yesterday in the S&Ps. That was 73. We got to 72.50 already, and a lot of stocks are setting up that way too. So keep an eye Friday, Monday's high. See if we can get another leg higher out of this market.
All right, before I go, see my comment in the, I'll put it on the screen too. See my comment on the screen and in the chat. The FinTwit conference is around the corner. The link is in the description and pinned to the top of our YouTube chat. Use the code BZYouTube20 to get 20% off your ticket to the conference and to the exclusive Benzinga workshop within the conference. That's a wrap for us, though. Thanks to Eric Krull. Thanks to Joel. Thanks to Dennis. Please remember, all the information from our show is meant to be used As informational purposes, not for investing or trading advice, this stream will end and redirect you over to live trading with Ryan, Mitch, and Zunaid. So everyone have a great rest of your day. Stay green, and catch you later. And hit the like. Just, see the thumbs up? Just press it with your finger, just like that.